Hello everyone, welcome to today's session. Today we will be discussing about related income tax return filing and revised income tax return filing. My name is Saikat Roy and I am part of CLEAR. I presently handle the internal tax team and I have experience of 4.5 years in the domain of income taxes and international taxes over here in CLEAR. Now, in today's webinar, we are going to talk about a couple of interesting things, couple of important things, that is belated income tax return filing and revised income tax return filing. As we all know, on 31st of July 2023, the return filing season, the normal date of return filing is right now. Now, firstly, belated income tax return filing. So, belated income tax return filing is governed under Section 139, subsection 4 of Income Tax Act. Now, under this provision, whenever you are filing your income tax return, you need to mention that you are filing under this particular section, right? So, if you are filing a income tax return belatedly, please make a note that it can be filed up till 31st of December 2023, right? Also, if you are filing after that, you cannot file your income tax return beyond 31st of December, be it a revised return filing, be it a belated tax return filing. So this date you should be keeping a very uh, close attention to, right? So 31st of December is the last date you can file your belated tax return. Now, if you are filing belated tax return, please make a note that new tax regime is not available for you for this filing. So you have to stick with the old tax regime. Now, old tax regime and the switch between new tax regime and old tax regime, choosing either or, that is valid up till if you are filing your income tax return before 31st of July 2023. Since that day has passed, you have to stick with the old tax regime. Thirdly, the current year's loss carry forward is not possible at all. So one of the key criteria of carry forward the losses, the current year losses that you have incurred, is to file your income tax return within the due date of 31st of July 2023. All right. So if something is going on, I'm going to start again. Sorry for the inconvenience rather. Right. Uh, so as I was saying, uh, belated income tax return can be filed till 31st of December 2023. Right. So uh, uh, if but beyond 31st of December 2023, you will not be able to file your income tax return for the financial year 22-23. Right. So the financial year that starts from 1st of April 2022 and runs till 31st of March 2023. During this period, whatever income you have earned uh, on that particular income, you can file your income tax return till 31st of December. However, there are a couple of instances, couple of penalty that will be leviable upon. Firstly, late filing fees up to 5,000 rupees will be chargeable. So even if there is no tax due, you are required to pay a late filing fees because you are filing the tax return beyond the due date of 31st of July. Late filing fee under Section 234F will be applicable for you. So at the time of filing the tax return, you are supposed to pay this amount. However, if your income is not more than 5 lakh rupees, right, in that case, the late filing fees can come down to 1000 rupees. Right? If it is more than 5 lakh rupees, then most definitely late filing fee of 5,000 rupees will be leviable upon you. If it is lesser than that, in that case, 1,000 rupees would be chargeable. However, if there are any tax due, in that case, obviously there will be some interest payable by you as well. Now, if you have filed your income tax return within the due date, there are two sections that used to get attracted. That is 234B and 234C. These two sections. However, if you are filing your income tax return, these two sections, the interest under these two sections will be attracted without any doubt. However, there is one additional section which will be triggered in this case. That is 234A. Now, under 234A, if you are filing your income tax return after the due date and there is a tax due, in that case, on the due amount, you are supposed to pay interest at the rate of 1% after the due date is over. So, you should be keeping that thing in mind as well. Also, there is one particular challenge or particular issue you are going to face if you are filing belated tax return. That is, the present year's loss cannot be carried forward. So, for example, if you have incurred a capital loss, right? Say it is coming to 3 lakh rupees of capital loss, short term capital loss, right? So, normally, if any short term capital gains is present or any uh, eligible long-term capital gains is present as well, you could have set off this short-term capital loss with that short-term capital gain or long-term capital gain, whichever is applicable for you. After setting off these gains, if you had some sort of loss which is still pending, you could have carried that loss forward for 8 further years. However, since you are filing belated tax return, in that case, after current year's adjustment, gains adjustment, you are not you will not be given the permission to carry forward this loss. Therefore, this is going to be a really big challenge because you cannot carry forward this loss. Now, why this is going to be a challenge? If you are carrying forward a particular loss, say for example, a short-term capital loss, in that case, in any future year, if you incur any short-term capital gains, that particular gain will can be offset with the carry forward loss in the year of gains that is happening to the extent of loss it is available. So after 3 years, uh, you have made a short-term capital gains, let's say of 2 lakh rupees, and after adjustment of this year, the carry forward loss is coming to let's say 50,000 rupees. Now, if you carry forward this loss after 3 years, in the third year, your taxable capital gain will be 2.5, lakh rupees, which is after offsetting 50,000 rupees of carry forward loss. However, if you are filing belated tax return, in that case, your taxable capital gain after 3 years will be 3 lakh rupees, and you are required to pay taxes on the entire 3 lakh rupees. So, in that way, uh, you could face a financial conundrum. Now, another key point if you are filing belatedly, that is, you cannot choose the new tax regime. You must file your income tax return under the old tax regime. Therefore, it is a very good practice to file your income tax return. But if you are facing certain problem which prevented you from filing your income tax return, you can certainly look to file your income tax return belatedly under this particular section. So there might be a certain cases wherein you should be filing your income tax return. For example, if you want to claim the uh, TDS refund, right? So you know that your total income for the year is lesser than 5 lakh rupees, right? However, there is lot of TDS that has been deducted. So you want to get that TDS back, right? So after adjusting all the incomes and everything, sorry, penalties and everything, whatever amount is there, you can claim that amount as refund. Also, you may want to file your income tax return for visa purposes as well. So, based on this, if you have missed your income tax return filing due date, please don't be disheartened because you can still file your tax return by 31st of December 2023. Now, we have talked about the belated tax return. Now we can talk about, or we should be talking about, the revised tax return. Now, revised tax return comes into picture if you have made certain errors, right, unintentionally in your original tax return filing. So the department gives you a chance to revise your income tax return under this particular segment section, that is 139 subsection 5. Now, there might be a couple of question popping up in your mind that how many times can I file a revised tax return, and what will happen if I file the revised tax return to the original tax return file. So, firstly, let's clear up a couple of confusions. Uh, so, if you are filing a revised tax return, the revised return replaces the original income tax return filing. So after you file a revised tax return, the original income tax return that you have filed, it loses its identity. It is no longer valid, right? Only return in existence in the eyes of income tax department will be this revised tax return filing. However, if you have filed your income tax return within the due date, in that case, the revised tax return will not attract any kind of penalty or late filing fees for the matter. Second most common question that arises, that how many times can I file a revised tax return? So there is no upper limit prescribed under the section as such. So you can file revised tax return uh, till you feel that all the errors, all the mistakes that you have committed in the original income tax return has been addressed, has been cured. However, there is one key aspect you should be keeping in mind, that revised tax return filing can be done till 31st of December 2023. So that's something you should be keeping in your mind. Right. Now, again, couple of things you should be keeping in mind while filing your revised tax return. Firstly, the revised tax return should follow the same tax regime that you have chosen under the original tax return filing. Right. So, if you have filed the original tax return under the new tax regime, then the revised tax return should follow the new tax regime as well. If you have filed under old tax regime, it should follow old tax regime. If you are switching between the regime at the time of filing revised tax return, the income tax department, while processing the revised tax return, is going to disregard the regime you have selected in the revised tax return filing and go ahead and process the tax return as per the uh, new uh, original returns tax regime that has been selected. So be very mindful of that. Also, uh, over here, if there is some tax due, right? If there are some tax dues because you have declared certain income, in that case, certain amount of interest can also be attracted at the time of filing the income tax return. However, since the original return, I'm assuming that you are going to file the reverse tax return and file the tax return under the new within the due date. Now, if you have filed your original tax return within the due date, in that case, interest will be levied under two different sections, that is 234B and 234C. Late filing fees and interest chargeable under section 234A will not be attracted as you are filing a revised tax return and the return was filed within the due date. Now, even if you are filing, if you have filed your income tax return after the due date, you can still revise that belated tax return under this particular segment. So, if, say, for example, you have filed your tax return on 10th of August 2023, and that is your original tax return filing, you can still revise that tax return that was filed on 10th of August 2023 by 31st of December 2023. So, again, if you have filed your tax return, but after reviewing it, you came to know about certain mistakes that were committed at the time of filing the tax return, you can revise it without any problem. Also, uh, revised tax return can be filed in response to intimation that has been received under 143.1. Now, income tax department normally issues intimation under section 143.1 once they have processed the income tax return, checked the arithmetical accuracy of the tax return, and satisfied with the result. Right? So there are certain cases, certain of instances wherein the income tax department may give you a demand or a refund. Right? Now, after going through the intimation, if you came to know that their demand, by any chance, which has been raised by the income tax department, was due to certain non-consideration, right? Maybe some time mismatch has happened, right? So you have claimed a TDS on your salary, but by mistakenly you have provided a different PAN, right? And at the time of processing the income tax return, income tax department normally checks the uh, tax TDS sections, right? What is the amount that has been offered for taxes? What is the TDS amount? What is the section number? What is the TAN of the deductor, etc., etc. And because of certain mismatches, because of revising the TDS return, there might be some TDS mismatch, right? So if you come to know about those particular discrepancies, you can certainly file a revised tax return with corrected details, so that all the problems, all the issues in the return filing can be addressed to. So these are the things you should be keeping in mind while you are filing your revised tax return. Now, what are the documents that are needed for belated filing and reverse return filing? Now, normally, all these things, that is normal return filing, the belated filing, and the reverse return filing, for all of them, you should require the same set of document. That is Form 1626 says annual information statement, which can be downloaded from the income tax portal. Your tax investment and tax saving expenses made during the year, capital gain statement, last year return copy, and specifically if you are filing a revised tax return, you shall need the acknowledgement number and the date of filing the original tax return, because all these things need to be mentioned at the time of filing a revised tax return. Excuse me. Because as we have discussed, the revised tax return actually replaces the original tax return. Therefore, it should know, or it asks for which return it is replacing, right? That is why they ask for the acknowledgement number, right? So, if you have all this document ready with you, then you are ready for filing the revised tax return or related tax return, whichever is applicable. Now we are going to talk about certain mistakes you should be looking to avoid during the ITR filing process. Firstly, uh, don't miss out on claiming the deduction under various sections for filing old tax regime. Now, since you are filing your tax return belatedly, right? In that case, in that case, the new tax regime is no longer available for you. Furthermore, if you are filing a revised tax return and you have chosen the old tax return at the time of filing the tax return originally, in that case you are stuck with the old tax regime. You cannot choose switch between the regimes. There might be a situation wherein at the beginning of the year you have chosen to be taxed under the new tax regime. Now, since new tax regime is no longer available for you, you have to stick with the old tax regime. Now, one of the biggest benefit of old tax regime is that lot of deduction is actually available for you to take benefit of, right? So there is HRA, there is home loan interest benefit, there is ELSS investment, life insurance investment, medical insurance investment, all home loan principal. So all those deductions are available under the old tax regime. Therefore, it is very much, within your within your right to claim this deduction in your tax returns. So, if you have all the documents ready, you have proof for all the expenses that you have made, then by all means, you can claim those deductions in your income tax return by following old tax regime. Furthermore, you can claim benefit for if you have made any donation to any charitable institute. However, there are certain clauses attracted to attached to this donation, these types of donation made. Normally, whatever amount of donation you are making, out of that 50, only 50% of it is allowed as deductible. Therefore, you should be keeping the tax receipt handy, and the maximum amount you can claim is 50%. However, there are certain charities wherein you can claim the entire sum. For example, PM Cares Fund or Chief Minister Relief Fund, so or Army funds. So those type of institutes, if you are making a donation to, can give you a taxable benefit, tax saving benefit of entire amount you have donated. Now, another useful tool for you to use at the time of filing the income tax return is uh, annual information statement, that is AIS. Now, in AIS, you will be able to see that all the types of income that you have had during the year has been listed out, right? It does not matter whether tax has been deducted on that particular income or not. Any amount that has been accrued by you as income will be reflected in AIS statement. So in 26As, it also shows certain income. However, uh, in 26As, it will show only the incomes on which tax has been deducted, or you have submitted 15G or 15H form to the tax to the payer. However, in AIS, it will show whatever income you may have. Also, from this year onwards, AIS will also show the amount of tax that you have paid during the year. It can be advanced taxes, it can be self assessment taxes, whatever it may be. Now, if you have indeed made some amount of advanced tax payment, it is vitally important for you to get a hold of AIS because all the relevant data for taking the benefit of advanced tax payment is available in the AIS. So to claim the amount, you need to show the BSR code, the challan number, the date, etc., etc. So all those details were previously available in 26 days. Right now, those details have been taken out of 26 days and been reflected in annual information statement. Therefore, it's very, very important for you to go through the AIS. Now, another thing you should be keeping in your mind is to carry forward the losses. If you are filing a belated tax return, right? If you are filing a belated tax return, uh, you cannot carry forward that year's loss, but that will not stop you from carry forward previous year's loss. So, if you have filed your tax return within the due date in which loss has been incurred, in that case, you will be able to carry forward these losses. Therefore, you need to represent, you need to show these losses, even if you are filing a belated tax return or revised tax return, right? There is another benefit that this carry forward of losses can be set off against current year gains. You can certainly do that, right? However, you need to be keeping one thing in mind that specific type of loss can be set off against specific type of profit. For example, business loss cannot be set off against salary income, or long-term capital loss can only be set off against long-term capital gains. It cannot be set off against short-term capital gains. Therefore, be very mindful about these things and be very, very mindful about setting off the losses. Now, hopefully, we have understood, we have certain understanding of the belated tax return filing and revised tax return filing. Now, we are going to take a look at the new tax regime uh, and what are the changes that has been made under the new tax regime. Now, this year, there are certain big changes that has taken place under the new tax regime. For example, the new tax regime has been made as a default tax regime. Right. So if you are not choosing any tax regime, in that case, your employer will be choosing the new tax regime as your default tax regime, and your tax computation, your tax deduction, everything will happen as per the new tax regime. Old tax regime will not be having any say uh, this point forward if you are not explicitly choosing the old tax regime. However, you will still have the option to go back to old tax regime at the time of filing your income tax return. However, that will happen on or before 31st of July 2024. So till that point of time, till 31st of March 2024, you have to stick with the new tax regime if you have not selected any tax regime at the beginning of the year. Also, uh, standard deduction of 50,000 rupees, which was only available under the old tax regime, has been made available under the new tax regime as well. So if you are opting for new tax regime, you will get a straight away deduction of 50,000 rupees from your salary income at the time of computing the taxes. Also, uh, the rate of slabs has been changed significantly under the new tax regime. Previously, every increment of 2.5 lakh rupees would attract an increase of tax by 5%. Right now, every increase of 3 lakh rupees of income will attract a rate increase, the tax rate increase of 5%. However, it is to be noted beyond 15 lakh rupees of income, the rate of tax jumps to 30%. If we have taken a look at the progression, it would have been coming to 25%, but it's not. Beyond 15 lakhs, your rate of tax is straight away 30%. Excuse me. Also, the rebate limit, right? 87A rebate limit has been increased to 7 lakh rupees from 5 lakh rupees under the new tax regime. Under the old tax regime, the 87A rebate is still available up to 5 lakh rupees of income. However, not only the amendment have increased the 87A limit, they have also increased the rebate limit from 12,500 to 25,000 rupees, right? So if you go by the slab rates provided by the department, provided by the income tax act, you will see on 7 lakh rupees of taxable income, you are supposed to pay tax of 25,000 rupees, right? So that entire amount of tax will be given to you as rebate, as rebate if your income is not crossing 7 lakh rupees. That is the maximum amount of rebate you are going to get. Furthermore, the concept of marginal relief has also been introduced under the new tax regime. Now, marginal tax relief is a concept which follows the principle that uh, additional income should not, sorry, tax on additional income should not be more than the additional income itself. So, if we look at the rates prescribed, up to 7 lakh rupees, there is no taxes, right? However, if your income increases by 5,000 rupees, right, you are supposed to pay around 26,000 rupees of taxes. Now, this might sound a little counter productive because up till 7 lakh rupees, I am not paying any taxes. But my income jumps a little bit above 7 lakh rupees, it comes to 7.5 lakh rupees. I am paying taxes of 26,000 rupees, right? Not only that, my income has increased by only 5,000 rupees, yet I am paying taxes of 26,000 rupees. Now, to rule out, to negate this uh, weird situation, the concept of marginal relief has been introduced. Now, under the marginal relief, uh, the amount which is over and above 7 lakh rupees, uh, that will be collected from you as taxes instead of collecting the some tax on the entire sum of money. So over here in this scenario, since your income is going beyond 7 lakh rupees only by 5,000 rupees, the 5,000 rupees will be collected from you as taxes plus education cess. You are not supposed to get the 26,000 rupees of taxes. However, the marginal relief stops at 7,27,777 rupees of earning. Therefore, you will not get any benefit of marginal relief if your income is excess of 7,27,777. Excuse me. Now, another benefit. Now, this is targeted towards HNIs. If if uh, the surcharge rate, if your income is beyond 5 CR, in that case, the higher surcharge rate of 37% is attracted upon you. However, under the new tax regime, 37% of surcharge rate has been done away with. Right now, you are supposed to pay surcharge at the rate of 25%. Right? So that's good news for HNIs. Now, we are going to take a look at the comparison between the new tax regime and the old tax regime. Right. So we are going to take a look at the salaried income of 16 lakh rupees. Now, if we look uh, under the old tax regime, you are allowed to get, or you are going to get, a deduction of standard deduction, your home loan interest deduction, your APCs, the LICs, ELSS, principal on home loan, tuition fee of children, etc., etc. You are going to get a deduction of ATD, medical insurance premium paid for yourself and your parents. All those deductions you are going to get. And after taking all the deductions, right, your total taxable income comes to 10 lakh 50,000 rupees. However, after the budget change, there are a couple of deductions you are going to get. Firstly, the standard deduction of 50,000 rupees, and secondly, employer contribution towards NPS. Now, this employer contribution towards NPS that is covered under 80CCD2, it was still available under the new tax regime prior to this budget. However, that situation has continued under the post-budget situation as well. Therefore, you are going to get a deduction of 50,000 rupees. And after all the deductions and everything, your total taxable income is coming to 15 lakh rupees under the new tax regime. Now, let's take a look how the tax actually plays out, right? So, under the old tax regime, uh, up to 5 lakh rupees. So 2.5 lakh to 5 lakh rupees, the rate of tax is 5%, and you are going to get a tax of 12,500 rupees. From 5 to 10 lakh rupees, the rate of tax is 10%, sorry, 20%, and you are going to get a tax of 1 lakh rupees, and beyond it, it's 30%, for which you are going to get a tax of 15,000 rupees. And if we consider the health and education cess, your total tax payable will be 1,32,600 rupees. Now, after the change in the budget, you can see up to 3 lakh rupees there is no taxes. From 3 to 6 lakh rupees, the rate of tax is 5%. From 6 lakh 1 to 9 lakh rupees, it is 10%. And by this logic, up to 15 lakh rupees, your rate of tax is 20%. If we take all this together, the total income tax comes to 1,50,000 rupees. And if we factor in the cess, health and education cess, uh, your total tax payable will be 1,56,000 rupees. So there is a gap of around 24,000 rupees under the new tax regime and old tax regime. Now we can see that the gap used to be pretty huge between new tax regime and the old tax regime. And the government, the income tax department, uh, every single year is bringing this gap closer and closer. So maybe a few years down the line, the new tax regime will be much more beneficial than the old tax regime. However, we cannot comment on that as of yet, because every decision lies with the income tax department. So that is our webinar, that is our presentation. So if you have any question, please let us know so that we can take those up. Thank you.